Good morning. Welcome to Stock Market Today. It's Wednesday, March 3rd, 2021. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show. We also give you daily stock ideas to consider, and that hits your inbox every trading day before the market opens. So U.S. equities finished lower on Tuesday, ending near the lows of the session. Tech, consumer discretionary lagged the broader tape. Staples, healthcare outperformed. Materials led thanks to strength in the metals. Treasuries were mostly stronger with the middle of the curve leading. The dollar was stronger on the yen, but weaker against the euro. Gold finished up 60 basis points. WTI crude settled down 1.5% on the day. As we get to the desk this morning, we are rebounding. So choppy trading continues. S&P futures are up 60 basis points after Asian markets were higher overnight with solid gains out of Hong Kong, China, and Taiwan. European markets are moving higher. Treasuries are weaker across the curve. The dollar is stronger versus the yen, weaker on the euro cross as well as against sterling. Gold is down 60 bips. WTI crude is up 1.5% to kick us off on a Wednesday morning, right? So choppy trading continues in the near term. And this is something that we wrote about in a note to clients on Sunday as it relates to a rapid rise in rates. What tends to happen is equity markets take some time to digest that. They trade choppy with a slight downside bias over the course of the next couple of weeks of trading. I think we're living through that now, last week being a great example of that. Ultimately, if past is any guide, we generally resolve higher as investors come to the terms with the fact that rates are likely rising because of better economic prospects. But in the near term now, we're living with choppy trading, but no real change to the structural trends that we have been identifying. One change, I guess we could say, is that the Qs are now laggards, and we'll talk about that a little bit later on in the show. But from an absolute basis, which is what we're looking at here on these charts, support in the 370 to 380 range, and then above 340, we're still playing for 413 on SPY. Qs, 315 to 320 is near-term support. We're there. We're dancing with it. Then 300 below that. But importantly, Qs now slight laggards. IWM support 200, 210, then 160, 170. Trend is up until proven otherwise. That message is unchanged. All right, what I see is a consolidation here within the context of larger structural trends as equity investors digest that rapid spike in interest rates. And remember, that interest rate spike is a global phenomena. Now, over the course of the past couple of days, we've seen some news come out. The RBA in Australia actually did intervene as rates rose there. Investors in Europe starting to ask questions of the ECB. What's fascinating about that is that rates in France and Germany are still negative. So that's just kind of the slightest uptick in rates seems to bring out the chorus of people looking for the central banks to take action. We'll see how this plays out. I don't know. I think it's just a fascinating dynamic within the markets. What we concern ourselves with is price and trend. Trend is up right now, near-term consolidation within the context of that uptrend. Equity markets by our overbought, oversold measure here at Chaikin Analytics are oversold for the most part here in the U.S. Let's hit our market in a minute. What are we writing about in that note today? Well, equities give back a portion of Monday's gains and actually closed near the lows, right? So selling pressure picked up into the close yesterday. Despite that, we're seeing a rebound in the futures this morning. Q's now a laggard relative to SPY. India is a leader outside of the U.S. Now, I have this view that I've written about multiple times in notes to our clients that, looking for opportunities outside the U.S. makes sense with a particular focus on Asia and India. So just kind of a further play on that theme. Sentiment roughly unchanged. Specs are slightly net long. Now, speculators in the S&P products, again, something I touch on in my notes, had been net short, small net short for the past few weeks. It looks like they used the weakness in the market to move slightly net long. But if I look at it kind of from a Z-score basis, nothing contrarian to write home about. As I said, futures do point to a higher open here today. Now, let's look at the indices from a power bar perspective following yesterday's activity. 7.6 bulls to bears after the Dow lost 44 bips. S&P down 0.75%. 135 to 49 bulls bears there. NASDAQ underperforms down 1.6%. As I said, now a laggard, 20 to 16 bulls to bears on the ratio, but the relative strength of the NAS has turned bearish slightly by our work. Small caps also a laggard on the day, down nearly 2%. Still a solid power bar ratio there, 756 to 195 bulls to bears. Bonds flat on the day, according to the Chaikin power bar. Small cap stocks and large cap stocks remain bullish. It's our stock of the day. Now, I told you India is an appealing market to me. So what I like to do in that situation, kind of that top-down approach, thematic thought process, and say, well, if India is appealing to me, what are some of the appealing stocks or potentially appealing stocks within our framework of the Chaikin Power Gauge rating? So, ADRs that list here that we have a rating on. Wipro comes to mind as a bullish rating. Bucked the trend yesterday, up 1.25% in a generally down tape to close at $6.47. The trend is strong as it trades above our rising long-term trend line, and the industry group is strong. That's IT services, part of the software and services area of the market. If you were looking at, say, like XSW as another ETF that represents this theme, I don't know if Wipro is a holding there. However, let's get back to the stock level. What I see is a bullish stock that is outperforming the market. Overbought, oversold indicator is oversold and rounding higher. So we have a situation where we are oversold within the context of an uptrend. Chaikin money flow is bullish and spiking. So if I'm thinking thematically, and if you agree with my view, and maybe you don't, maybe you have reason to think that India is not a place to invest, and that's fine too. However, if you agree with a thought process there, Wipro might be a name that you want to pay attention to and potentially do more work, as it is a leading stock oversold within the context of its uptrend here at Chaikin Analytics. Taking a look at the sector tracker now, movement of the last 5 days, still very much the cyclical plays, right? Big rally last week, still within these numbers. Little extended to the upside. Yes, I've written about that. I've talked about that. The cyclical reopening, reflation, call it what you want, trade, is somewhat extended to the upside. Now, that's fine. Overbought within the context of an uptrend, right? We all know what that means. Know when to lay back, know when to attack. Middle of the road and up, comms and tech ever so slightly, and it's a move in the right direction. Laggards and down over the past 5 days of trading. Healthcare, discretionary, and then, as I said yesterday, your defensives at the bottom of the list is something you want to see if you are an equity bull. Staples, utilities, real estate at the bottom of the list. Now, ideally, as I said yesterday, we want all of these green and these three at the bottom of the list. That is a great board, but notwithstanding that, we don't always get what we want. Market doesn't care what we want. We play the hands we're dealt. And right now I see cyclicals leading, I see defensives lagging, and I see the secular themes kind of middle of the road for now, all lining up with the trends that have been in place roughly since September. Industry in focus today, biotech services. Past 6 months, been an outperformer. XBI, the ETF here, has outperformed the S&P by nearly 28%. Power bar ratio, though, is weak, and this is kind of a nuance of a fundamental / quantitative model here, in that, when you have a model that looks at things like revenue, earnings, profitability, et cetera, biotechs, that where a lot of situations are pre-revenue, right? Science projects, tough to get a bullish rating in that environment. So I like to take the fund, kind of as the trend perspective, right? Some indicative stocks here again: TG Therapeutics, Cytokinetics, and Mersana, all with very bearish ratings. But each of these stories have to kind of be taken on their own, or biotech investing requires a unique skill set, and perhaps for some, the best way to look at things is just kind of as a broad-based ETF approach. XBI as a neutral rating, dancing with our rising long-term trend line, slightly below it actually, is oversold with bullish money flow with waning relative strength. So this to me looks like one where if it's going to stabilize and maintain this bullish trend, it has to do so from here. This support zone between 140 and 150 to me has to hold up if biotechs are going to continue this steady uptrend. Now we got overbought and extended here. Maybe this is just a pullback, but we want to see 140 hold. from a trend perspective. Let's look at yesterday's movers and shakers, our gainers and losers on the S&P. Fox was up on reports that it is not going to renew its Thursday night football contract with the NFL. I guess investors like that. I'm not in the weeds on it, so can't really opine other than to say investors liked it. It was up 9% yesterday. Nielsen up 7.5% following news of a strategic alliance with Roku. Carnival Cruise Lines up 4.5%, 4.8%. No news there. Ford hit a 52-week high. Didn't see anything company specific to drive that bullish stock to new highs. Norwegian Cruise Line priced some notes. That stock higher by 4.5% on the day. On the loser side of the board, Enphase. Didn't see anything company specific, but will note that the clean tech solar plays are under pressure here of late. Target earnings, good print, bad reaction. Stock down 6.75%. TER down 5.4%. Nothing company specific there. Clack down nearly 5%. Again, maybe some money coming out of those semi names. And Twitter price to convert, investors took 5.1% out of the stock. Let's hit the charts. Sentiment largely unchanged. And I know we've showed this chart a lot, and we're going to continue to show it because it's part of the process. So even with the sell-off over the past week and choppiness in the equity market, the 13-day moving average of the CBOE equity put call ratio ticks up slightly. It was 0.42 last week. It's 0.44 this week. For all intents and purposes, flat. But slight uptick, still resides in that excess greed position. And again, I say it every week. I'm not going to change it. The day I stop looking at it will be the day it matters. So we're not going to stop looking at it. That whole backdrop with the equity options plays out as the VIX continues to hold above 20. So no real change there. A little spike last week with the drawdown in equities and now starting to come back in. The big story is, will the VIX break 20? Everybody's watching it. Everybody's waiting for it to happen. Generally speaking, the market doesn't care what everybody thinks and or wants to happen. It will do its own thing as always. The VIX is holding above 20 despite the excess exuberance on the part of equity options traders that has been in place since last summer. Let's dive into the Qs now. I said I wanted to take a closer look here, and we're going to. Now, we have the Q chart that we start off the show with every day. But let's dive in a little bit further. Take a look at what's happening here. Near-term pullback brings us to the 50-day moving average. Now, last September and last October, November, we did the same dance, cut below the 50-day. And then quickly rebounded. But look at what's happening here. Really, since early September, right? Again, as I said, a lot of these trends have been in place since early September. Look at the relative strength. In this case, I'm using the scooter within the stock charts framework to get a gauge of relative strength. Look at what has happened to NASDAQ relative strength over the past, I guess, September, October, November, December, January, February, 5-6 months almost. We're going on 6 months. We're at 6 months now, where relative strength has just been diminishing in the Qs to the point now where we are a slight underperformer by our work. Interestingly, we have not become oversold from an RSI perspective, but we're below that 50 mark. Kind of 40 is the lower bound of bullish ranges for this indicator. And we'll see if we can quickly get back above, right? And everything kind of resolves to the upside. Or will the Qs be a laggard? We're not used to the Qs being a laggard, but it can happen. And being a laggard could mean equity markets continue to trend higher and the Qs just don't keep up. They don't go up as much, right? So it's not necessarily mean Qs are going to go down. Okay, remember relative weakness can be achieved in 3 ways: going up less than the broader market, going down while the broader market goes up, or going down more than a declining broader market. So just kind of keep that in mind. Chaikin money flow, bullish, but well off the highs from late last year. And then finally, here's India. INDA, the iShares MSCI India ETF, consolidating just below 52-week highs as the RSI holds bullish ranges. Take a look at India relative to SPY, trading near 52-week highs as well, with strengthening money flow. So I've been open to the idea of pockets of global markets outperforming the US, and this is certainly one that has fit that bill. So something to keep in mind, which then takes us back to earlier where I said maybe you want to take a look at a name like Wipro. That is going to wrap us up for today. A special thank you. I don't do this enough, but thank you everybody for carving time out of your day to spend it with me here. Take us for a test drive, chaikinanalytics.com/test drive. I'll be back tomorrow.